This simple EMA trading strategy had a win rate of over 80% in the backtest. I'll be showing you exactly how the strategy works and which indicators we will be using. The strategy uses a fixed set of rules to make sure that you will know exactly when to enter into the position. Now let's head over to TradingView and add the indicators to the chart. We backtested the strategy on the 15-minute timeframe, so let's first select this timeframe. Now let's add the indicators to the chart. Navigate to the Indicator Search tab and search for the secret EMA Cloud indicator. Select the indicator made by Teddy Kleps and add it to the chart. Now let's take a look at how we will be using this indicator. The indicator consists of 3 exponential moving averages. The red line is the 200-period EMA, the white line is the 89-period EMA, and the green line is the 21-period EMA. In between these moving averages, a color is plotted to create a cloud. The main use of the indicator is to identify the trend of the market. As you can see, whenever the market is in an uptrend, the lowest period moving average will be above the larger period moving averages. So in this case, the 21-period EMA will be above the 89-period EMA, followed by the 200-period EMA. Whenever the market is in a downtrend, the opposite will be true. This means that the 21-period EMA will be below the 89-period EMA, followed by the 200-period EMA. As you can see, by using the indicator this way, we can easily spot trends in the market. However, one secret use case of the indicator is usually forgotten. The indicator also works as a consolidation filter. This means that the indicator can show us whenever the market is ranging or moving sideways. As you can see here, whenever the lines are not far apart, the market is usually ranging, and whenever the lines start moving far away from each other, causing for a larger gap between the lines, the market is trending. Now that you know exactly how we will be using the indicator, let's add the last indicator to the chart that will provide the entry signals. Head over to the Indicator Search tab and search for the BX Trender indicator. Select the indicator made by Quant Therapy and add it to the chart. We will be keeping the default settings of the indicator. We will be using the BX Trender as the entry signal indicator. The two main parts of the indicator that we will be using for the strategy are the trend line and the BX Trender line. The BX Trender provides long and short signals. A long signal is given whenever a green dot appears on the line, and a short signal is given whenever a red dot appears on the line. The trend line works as a confirmation for these signals. For a long signal to be valid, the trender line will need to be green and above the 0 line. For a short signal to be valid, the trender line will need to be red and below the 0 line. Now that you know exactly how all indicators featured in this strategy work, let's take a look at when to enter into a position when we combine these indicators. Let's first take a look at when to enter into a buy position. Firstly, the EMA cloud will need to signal that we are in an uptrend. This means that the green 21-period EMA is on top, the white 89-period EMA is in the middle, and the red 200-period EMA is at the bottom. It is also important that there is a large gap between the EMA lines, signaling that we are not in a ranging or sideways market. If this is the case, we will check the price action. We will need for the candlestick to pull back into or get very close to the white 89-period EMA. By doing this, we will make sure that we don't enter into the position at a swing high. Now let's take a look at the BX Trender indicator. We will need for the BX Trender to provide a long signal. As you can see, this happens here. To confirm that this long signal is valid, we will need to see that the trend line is green and above the 0 line. If this is the case, we will enter into the position. However, before we enter into the position, we will need to make sure that the price is trading above the 21-period EMA. As you can see, this is the case, meaning that all of the conditions have been met, so let's enter into a buy position. We will be placing the stop loss at the recent swing low. For the take profit, we will target the next bearish signal that appears on the BX Trender indicator. Make sure that when exiting the position, the trade is profitable, otherwise, we will not exit. As you can see here, the next bearish signal has appeared on the BX Trender. Therefore, we will exit the position. Let's now take a look at the exception that we previously mentioned. Firstly, we can see here that the EMA lines are in the correct order, indicating that we are currently in an uptrend. We also see that the EMA lines are moving further apart, causing for a large gap between the EMAs. Secondly, if we take a look at the price action, we'll also see a pullback to the 89-period EMA. Thirdly, the BX trender has provided a long signal. If we look at the trend line, we'll see that this signal has been confirmed because the trend line is green and above the zero line. Lastly, the price is still trading above the 21-period EMA, so we will enter into the buy position. We will place the stop loss at the recent swing low. For the take profit, we will target the next bearish signal. Now let's see how the trade plays out. As you can see, a bearish signal on the BX trender has been printed, however, we will not exit the position. This is because if we were to exit the position, the trade would not be profitable. Instead, we will either wait for the stop loss to be hit or for the next bearish signal that causes for a profitable trade. As you can see, with this bearish signal, the trade is profitable, and so we will exit the position. For a sell position, the following conditions will need to be met. Firstly, we will need for the EMAs to indicate that the market is currently in a downtrend. This is the case if the red 200-period EMA is at the top, followed by the white and then green-colored EMAs. It's also important that there is a large amount of distance between the EMAs. If this is the case, we will need for the price to make a pullback to the 89-period EMA. Once this happens, we'll take a look at the BX trender indicator. We will need for the indicator to provide a short signal. Once this signal has been provided, we will validate it by checking the trend line. It will need to be red and below the zero level. Lastly, before entering into the position, we will need to see that the price is trading below the 21-period EMA. As you can see, all of the conditions have been met, so we will enter into the position. We will place the stop loss at the recent swing high. For the take profit, we will target the next bullish signal. Now let's see how the trade plays out. We see here that a bullish signal was printed, but since exiting here would not be profitable, we will wait for the next bullish signal or for the stop loss to be hit. As you can see, a bullish signal has been provided by the BX trender. This means that our take profit condition has been met, so we will exit the position. Now let's take a look at the backtest. We backtested the strategy on the crypto markets. To make sure that the strategy didn't just work on one coin, we spread out the 100 trades over 4 different coins, taking trades for 5,000 bars on each pair. Here are the results for each coin. The first pair we backtested the strategy on was BTC/USD. As you can see, the win rate was 85.19%, with also a really good amount of profit. On ETH/USD, the win rate was a bit lower, but still extremely good at 80.65%, causing for a 33% profit. Litecoin had the best win rate at 90.91%, however, this is because we only managed to take 11 trades. The last coin we backtested the strategy on was BNB, where it got a 77.42% win rate, causing for around a 34% profit. This is the best 15-minute timeframe strategy we have tested on the channel up until now. I hope you enjoyed the video. If you did, please leave a like and subscribe to the channel. Thank you for watching.